Market is taking a little bit of an adjustment today. Bitcoin now under 50K. We'll be covering all that for you guys, give you some insights as to maybe where the direction is going, and break it down for you. My name is Paul Barron. Welcome back into Tech Path. All right, let's get started. Before we get going, let's thank Tangem, who is our sponsor today. And if you're looking at going into self-custody, this is one of the best ways out there to do it. And it's one of the tools I think that actually works really well. And what I mean by that is with the card and their app, you've got a secure method to get your self-custody from your exchanges right over to yourself. So all you have to do is click that little link up there at the top right and go over, and you can actually order the 3-card set. Always get the 3-card set. Gives you that extra security and the additional backup. So do that. Use our code down below. It does help the channel. All right, so let's get into a couple of topics today. Of course, the biggest news was the CPI inflation rate. Here's Kobe EC coming in. CPI inflation rate falls to 3.1, above the expectations of 2.9. There was expected to be a little bit higher. Core CPI inflation was unchanged at 3.9%, above expectations of 3.7, also coming a little hotter. This is the 34th consecutive month with inflation above 3% for the first time jump since September. So this is a big question as to it only elongates what we've kind of talked about for a while. And even since the last FOMC meeting was when I was feeling much less confident that we would see a rate cut before the end of the year or before the middle of the year. And again, all of that would hinge on CPI data. Now we've got our second set of CPI data coming in for January. And I think the key here is going to be February's print going forward. Because remember, this is going to go into a March FOMC that's going to be very critical at the next juncture of how the Fed is going to react to all of this. So if you look at the markets right here, here's Gary Soloway, been warning inflation is going to stall. It's declining around 3%. CPI numbers hitting and hotter across the across the board. If this becomes a trend, markets in major trouble, as the Federal Reserve will have to possibly table the idea of cutting rates entirely for 2024. That would be devastating, I think, to the political agenda. It would be devastating to the market. And I think this would also pivot quite a bit of the opinion as to whether or not this market is in a bull run. There are a lot of factors that really gets going into whether or not this also goes into a hard landing or a soft landing. Many analysts are still saying, hey, because of these sticky inflation numbers, this is still an indicator for a recession. And that's the problem I think that a lot of people are facing right now. Now, whether or not Bitcoin is responding to this in a big way, I'll go to the charts here in a bit for you, and where Bitcoin and both ETH are, and also some of the blue chips, because I think the blue chips, when you look at this news right here, if we were going to see a major market correction, you would anticipate one of those really deep slices into around 10%. That would put Bitcoin at somewhere around 45. That has not been the case. So a lot happening for sure. Fed's victory lap in December clearly proved to be premature. Remember that? Remember when we had the FOMC in December and it looked as though the Fed had said, we've got it, the situation's under control. And then January happened, and FOMC meeting comes in and things aren't quite as rosy and he's pushing it out further. My question is, does that happen now in March? So this would be a problem, of course, if we saw rate cuts. So no way that a rate cut is even nearly on the table in March. My question is whether or not we even see one in May now, which was really the anticipated date that I felt like we were going to get to. A couple of points hit on CNBC that they kind of talk about around this, but listen in. You can kind of get an idea of where they're going.
I think the Fed is going to be as freaked out about this number as perhaps the market is. If you look back, we pulled a quote from Susan Collins last week, and she's just used the word bumpy the way a whole bunch of other folks use the word bumpy. She just says, look, this is, we think it's going to come down. I expect the inflation slowdown will happen, but the timing is difficult to predict and the road may well be bumpy. This is what the Fed expected. I think what I see this morning is the market coming closer to the Fed. I don't think also, Carl, it's time to write off the idea that inflation is going to be slowing from here. There's a lot of January effects in here. The problem is I can't be proved right about this for another month or two.
All right, so a couple of things that I think they hit on is that the market is looking at this as kind of an expected, especially after the January meeting. I think that they actually might be right on this in the sense that this may be just that we're going to be dealing with this 3% range of inflation for possibly into the third quarter of this year. Now, the question is how does the market respond to that from a deflationary standpoint and also from a point of whether or not we think that there's going to be a recession, whether it's hard landing or soft landing. I think the big factor here will be watching the S&P 500 and watching the blue chips in terms of crypto, and also taking a look. We'll talk about gold here in a second because that has some factors going forward. Now, the other factor that you have to look at is Bitcoin's resiliency, because it is holding this 50K range fairly well. A couple of points here in this article. NASDAQ, of course, had a rocky start Tuesday. This, of course, you're losing 1.4. This is the first time we've seen a negative position in the NASDAQ on an opening in several weeks. So this is a big deal. Analysts say that Bitcoin surge past the key psychological sign also kind of puts out a little bit of a scenario where I think people are letting up on this. Maybe there were situations where a lot of investors were saying, hey, 50K is kind of my mark. That's another one. And remember, post-ETF sell-off of Bitcoin didn't last very long, so the break above 50K will be widely viewed as a significant milestone in its comeback. I agree, but I think this is one of those points that's going to be hard to overcome consistently, meaning 50K, getting over that. Once we do clear that area, I think that's the question mark going forward, because that could be the beginning of a true all-time high trajectory, providing two factors here. We continue to see inflation on chipping, whether we get a 1 point, a 2 point conditional change, or we see the job situation not becoming so dire. That's the other factor. Those are the concerns I have right now. CRE, I think, is still just an issue. Commercial real estate is still just an issue that we are going to have to be dealing with, and I think the markets have somewhat baked that in to a certain extent. Now, China is a little bit different, with what's happening over there with Evergrande. Crypto greed index hits its highest level from, since Bitcoin's last high at 69K. A couple of points here that I thought was interesting is that when you look at greed and fear and the index, along with what we've seen over the past 30, 45 days, I was a bit surprised that the greed index was so high on this, because even though we've seen upward trends in sentiment, we are still seeing a scenario where it's like we're not out of the woods kind of thing. And I think this is the thing that still surprises me, that this market feels so bullish. It's not that we are not going to have some sideways action, because in reality, that's going to be the case. And remember, it was just February. Also within this, cryptocurrency seeing a solid rally over the past few months, adding about 13% to its value year to date. That's just since January. So that's a good point right there in the sense of where Bitcoin is right now. Question is whether or not it will make it to the halving in the plus 50 range. That's a window that I think a lot of analysts and a lot of traders are looking at going into late April, early May, when the halving would occur. Because remember, there's a lot happening right there. And we talked about this in a video yesterday about how much demand there was for Bitcoin coming out of these ETFs. But at the same time, we don't have the supply. It's basically a supply shortage. Once the halving happens, we even have more fatigue on supply, which really could change the dynamic around this. Of course, Peter Schiff talking about the hotter than expected CPI. I don't know that this was hotter than expected. I think a lot of people outside of the traditional analysts that have said, yeah, this is where we're going to land. I've been still skeptical as to whether or not we can get past this. This is the sticky part that I'm just not fully into just yet for the markets. But it did cause gold to fall, even though I think gold is a repositioning asset right now below the 2K for the first time in 2024. That in itself is a deal. We'll show the charts here in a second. Matt Hogan came in with this. He basically says, in his opinion, 3 billion number undercounts the fundamental new investor demand for these ETFs. People assume all the money flowing out of GBC to date is rotating into other, most likely not. Long-term investors have started to backfill, and that added about 3 billion on top. So his point to Eric Balchunas, which is that there's been some massive moves of inflows into these ETFs. Now, the question is whether or not this can sustain. And I think that's the big point here right now. Here's some things to watch for, though. If we do see slowing inflows and you see an adjustment here of potential more data coming into the Fed, do we see that as a catalyst, meaning slowing inflows, more data adjustment, going into it? Remember, Typically, what we see in these pre-halving is a little bit softer market on Bitcoin. Do we see Bitcoin come under the 45K range? That would be my question to a lot of these traders out there. You got other things going out here. You got how much longer can Americans kind of keep buying crypto? And this is looking at more of a retail front on this. Most predictable crisis we've ever had highlight the urgent need for a reassessment of the fiscal trajectory, public's growing anxiety over government debt. Everybody, I think, understands that now. There's two frames of thought there. One, of course, is that you could have kind of the flight or fight mechanism in a lot of retail consumers, meaning they regress back into a cash position. Or you have people who have maybe finally given up on the traditional monetary system and said, I don't trust the dollar anymore, and I'm going to start adjusting my investment plan, maybe even my cash reserves, into a different frame of thought. And I think that's what we're dealing with right now in the United States is a bit of a conundrum here between maybe the markets. I think a lot of the Bitcoiners are thinking this way. A lot of crypto investors are starting to think this way more and more as we see continued pressure on the dollar. Going into the charts real quick, of course, right there is the big drop right here. We're looking at the Lux Algo transition right here on the signals and overlay. And some interesting points right here that I want to kind of focus on. When we were looking at this zone right here around the 50K and where it's regressed down to 49.2 currently, even though we did see it dip down to 48.2, was the separation in top line sentiment and bottom line sentiment in our market sentiment index. One thing that we've seen here since Bitcoin has been ranging above 48,000 is the separation of those two sentiment trackers. And typically, Bitcoin holds very tight together on these. So this is going to be one to watch. If you look at Ethereum, little different story, but it did take a big jump yesterday, of course, going up to 2659, first time over 2600 in a while, and then, of course, adjusting back down, still holding the 2600 rate. And then you look at Solana, which has continued to hold through this. This tells me that the market itself is still somewhat skeptical of where we're going to be going. Whether or not that is a positive scenario that plays out, I think, again, goes back to my point of you have two trains of thought. Some people who regress to cash, try to work the money markets, or a little bit more of the aggressive investor, which is going to be looking at this as an opportunity to catch some of these softer markets at even these small dips going forward. But anyway, Solana trading right there, up slightly on the day. Avalanche down, though, almost 3, and almost lost everything it's gained since yesterday. It back down at 39.78. The other ones that we're watching, of course, Link, also a regression back down. Ones that I like, of course, that we've talked about here, Render up 3, almost 4% right now in the day. Again, I think more tactical scenarios are playing on the tech side that are really good for some of these Web3 projects. So we're going to continue to watch that. We'll do a breakdown of that, give you guys a full rundown on what's happening over in the Web3 space and what's going on there, because there are some potentials there for some quick swing trades. So be sure to subscribe right now so you guys can get kind of an update of all that. If you're not in the Diamond Circle, make sure and get in right now. It's a great place to get additional content. Catch me on X @PaulBaron. Catch you next time right here on TechPath.